Nvidia remains the best investment opportunity of this decade. It might even be the best thing you've ever done. The real question is, what is the terminal value? I think Nvidia's revenue scale will probably stay the same for the next 2 or 3 years. As Sachs showed in that Cisco slide, people eventually realized that the value would go to other parts of the stack, the application layer. Additionally, as more and more money was raised at the application layer of the internet, Cisco's credit and revenue multiples decreased. And that's not a negative thing because Cisco's revenue continued to rise. Caroline Woods is at the New York Stock Exchange this morning with some analyst notes and commentary as we begin another week in the U.S. markets. Caroline, let's talk about Nvidia. How about that? Yes, Nvidia, always in the headlines and getting another price target raise from Wall Street. A cursory look, however, indicates that shares are increasing up around 0.7% this morning. Before advancing on those gains today, they had already gained 9% last week, 20% so far in June, and 166% so far this year. As I indicated, up just under 1%. Analysts located in Susanna raised their share price target to 160. Over the next 10 minutes, we'll discuss why Nvidia's stock is a wise investment and why the company is predicted to grow dramatically. Nvidia has established itself as a dominant force in the AI processor business. Numerous industries, including healthcare, banking, and the automotive sector, are seeing a sharp increase in demand for AI technology. AI chips, which enable faster processing and more sophisticated machine learning algorithms, are at the center of this technological revolution. Nvidia's state-of-the-art GPUs, graphics processing units, are now the industry standard for AI applications. Nvidia is the go-to provider for companies looking to integrate AI into their operations, since these processors are designed to handle the enormous processing needs of AI jobs. The market for AI chips is expected to grow significantly in the years to come. According to industry forecasts, the market could reach previously unheard-of heights as more industries use AI technologies. This increase is being driven by the increasing reliance on AI for data analysis, automation, and decision-making processes. This discovery puts Nvidia in a strong position to profit. Its continuous innovation in AI software and technology keeps it at the forefront of this growing industry. By continuously improving the performance and efficiency of its CPUs, Nvidia is not only satisfying but also surpassing demand. Nvidia's strategy is centered on innovation. Rather than resting on its laurels, the company is always pushing the boundaries of what its technology can achieve. Recent advancements in Nvidia's chip architecture have resulted in notable performance improvements, enhancing the company's competitive edge. For instance, Nvidia recently revealed the Hopper GPU architecture, which represents a significant improvement in AI processing power. This new architecture promises to give unprecedented performance as AI models become more complex and demanding. Yes, and they did a great job, but the value was diminished. In light of this, Freiberg, it appears that the Netflix and Cisco chart winners might be someone that is comparable to Netflix. They have hundreds of millions of clients who pay them money, and YouTube, of course, as well as Google and Facebook, which are in charge of all that traffic. Who do you believe is the victor in this instance in terms of the application layer? Who are the billions of consumers who will occasionally pay $5, $20, or any other amount? Let me start with one important point, though. If you look at where that money comes from, Chat's argument is that it comes from big cloud service providers. Consequently, Google and other businesses are building clouds that other app developers may use to build their AI tools and apps. As a result, these big companies control and operate the cloud data centers, where a significant amount of the build-out is situated. Even though Nvidia's data center generated $18 billion in revenue, expanding companies do not view it as an operating expense. Consequently, this is a key element in explaining why things are moving so swiftly. When big businesses buy these chips from Nvidia, they are not required to include the transaction as an expense on their income statement. It is actually listed as a capital expense in the cash flow statement. They document it on the balance sheet after depreciating it over time. Google and other corporations are able to invest $20 billion because they have $100 billion in cash on hand. and have been struggling to find ways to grow their operations through acquisitions. One argument is that there aren't enough companies for them to buy at a fair price that will allow them to experience a healthy increase in earnings. This is because the accounting and M&A environment is so excellent. There is no need for the P&L to suffer. To be honest, antitrust regulations will keep us from expanding through M&A at this time, and we don't need to purchase a business that is wasting money. This short-term increase is being driven by several other factors as they search for ways to grow. Yes, let's talk about Nvidia's stock's recent performance. The high stock price of Nvidia is a reflection of the company's robust growth and market potential. Nvidia is presently the second most valuable stock in the world due to the company's strategic stance and investor confidence. This stock's significant rise in value is supported by impressive financial statistics. For example, Nvidia's data center revenue increased by an astounding 427% from the previous year at $22.6 billion. This growth demonstrates the data center industry's increasing demand for AI solutions, a trend that is most likely here to stay. Nvidia's financial success has been exceptional. The corporation easily exceeded the average prediction of $5.60 per share with its recent report of $6.12 in profits per share. Such huge profits demonstrate Nvidia's dominance in the market and operational effectiveness. Furthermore, Nvidia beats the competition with an incredible gross margin of 78.4%. The company's ability to command premium prices for its innovative products is demonstrated by high margins, which further increase profitability. Given these factors, analysts' confidence regarding Nvidia makes sense. Many people believe that Nvidia is still inexpensive, even with the recent increase in its stock price. Nvidia's dominant market position and anticipated growth in the AI sector make it an intriguing investment prospect. In conclusion, Nvidia is not only leading the market for AI chips, but also shaping the future of AI technology. Nvidia's outstanding financial results, solid innovation history, and distinct development trajectory put it in a strong position to maintain its market leadership. Because analysts are optimistic about Nvidia's prospects, many investors think the firm is an excellent investment. Although I am aware that it was an accounting point, I think it is a legitimate and important one. You divide this year's $100 billion by 4. That would need to bring in $25 billion, or something similar. Sachs, any guesses? Yes, and so. Freberg, I think what you said about GCP spend is 100% true, but it might not be the same for Google spend. Although it is true for AWS spending, but not necessarily for Amazon, Azure, and Microsoft spending, it is generally not true for Facebook and Tesla because they do not have clouds. What is the percentage of that $21 billion that just went to those cloud providers that they'll then expose to everybody else versus what was just absorbed? It is, in my opinion, the question that motivates your argument. For apparent reasons, Nvidia doesn't disclose it. I take it that's all from Mark. He posted a video on the number of H100s on Facebook. My point is that it is still capitalized, though. They are therefore exempt from having to include that as an expense. It is shown on the balance sheet, and they can earn it down over time. You're helping to explain why these big cloud service providers are spending so much money on this, right? They're very profitable and have nowhere else to put the money. Therefore, it would seem that this is more of a one-time build-out than a consistent source of long-term income. I believe that Jamat's question, what is Nvidia's terminal value, is the primary one. In my view, the following is a simple method for taking it into consideration. What is the market share of GPUs, and what is their total addressable market, TM? They currently own about 91% of the market. That will obviously go down.